Welcome out this evening or on recording or whenever you watch this. Got some of the crew at Tackle Trading here tonight. Talk about an interesting subject that we've been internally discussing for a little while now. And I'd like to, my co-patriot, Noah Davis, and how are you doing tonight?
Well, I'm fantastic. Apparently, I'm a co-patriot.
Co-patriot.
I could be a compadre. I could really be anything you want. I could be your comrade. You name it. I'm on board.
I'll just call you Susie. How about that?
I've been called worse.
All right. So, becoming the best trader you can be, there's a lot of ways to do it, right? And we all have our different angle at how we approach it. But at the end of the day, we are looking for patterns. Now, those patterns can come in the form of trends. They can come in the form of classic technical analysis patterns. But when we normally talk about patterns in the world of trading, if you're new, and I hope that there's a lot of new people watching this, we're talking about patterns on a chart. And Noah, will you just explain what a classic pattern is in technical analysis?
Well, I mean, a classic pattern in as far as technical analysis goes, in my opinion, and kind of the way I've defined it over the years, is a behavioral pattern that when we see this type of buying and selling behavior express itself in a price chart, there's a certain probability that we'll see a continuation of that type of behavioral pattern. For example, a trend. Pretty simple pattern. That's simple,
classic pattern.
Higher high, higher low pattern, where we see the prices run up to new highs. You'll see some profit taking and some selling. And on modest dips or pullbacks in the price, buyers will step up and pay more. And it's a simple pattern. And when we can identify it, this is one of those things where they'll say, the trend is your friend. Always trade with the trend. Smart money is going to go with the trend. Well, within the context of price trend, there's other patterns. There's classic chart patterns, things like breakout patterns, chart patterns, things that we all become familiar with as traders, like cups and handles and heads and shoulders. And every classical technical pattern really is what it is it's a behavioral pattern, Mark. And when you see, for example, I happen to have this chart of Apple up because I'm watching for a breakout. And the reason I'm watching for a breakout is because traditionally speaking, when prices break to a new high, it's an opportunity to buy.
And Noah, are you the only human being looking at a breakout on Apple?
Well, no, see, that's one of the nice things about these behavioral patterns and these patterns in general is once they are identified, they become one part natural occurring phenomena. I think one part self-fulfilling prophecy. So the fact that Apple is poised for a breakout, we could sit and find dozens of these charts.
And what is a breakout for someone that's new to trading?
It's an interesting price. It's when prices break to a new high above a previous price ceiling. So in this example, we have a previous high of $327.87 or 85 cents was established back in February, before the market went on this dip and correction. And that becomes a price threshold. That becomes a price ceiling that's pretty easy for people to identify. And when prices approach that ceiling, we're either going to watch and see if that ceiling holds, that price threshold holds, or if it breaks to a new high, that indicates to us that there's more demand than there is availability of supply. And it's a really good short-term timing mechanism, but it's really counterintuitive. It's kind of funny. It's like, okay, I'm looking at Apple stock. We could back this out and look at it on a weekly chart for years and years and years and years. And Apple's about to break to the highest price it's ever been. And there are traders lining up to buy. I mean, how many of you, normally in like regular life would ever think to yourself, that product I want, it's never been more expensive ever. I think I'll buy it after it gets marked up one more time. It's a really weird kind of disconnect between the normal consumer behavioral patterns and traders and investors' behavior patterns. Because if a stock's breaking to a new high, that's an indication that there is a tremendous amount of demand and there's a limited amount of supply.
No, and so you're waiting for it to get to a new high, and traders in Georgia are waiting for it to get to a new high, and traders in Washington State and in Japan and Rio de Janeiro and in Germany and all around the world, and yet none of us talk to one another. We're all in these different parts of the world, and yet we're all waiting for the same signal. It's that go signal. It's like, all right, now.
when I've kind of sitting here watching it closely, and I'm thinking to myself, well, you go first. And if you start buying and I see other people start buying, then I'll buy. But it's just a classic behavioral pattern. There's many different types of economic behavioral patterns and people are somewhat predictable, and they don't always pan out. But what they do give us, Mark, I think, is in the real benefit of all the analysis of, chart patterns, trend patterns, and then again, we're going to talk about other behavioral patterns tonight, is that it gives us a statistical edge, an express edge, which is all we will ever really get from all of our analysis in the world. Sometimes we can be dead wrong about what we think the behavioral pattern is going to be, and we get a different outcome. But statistically speaking, once we find that pattern that tends to repeat, that gives us an edge. It gives us an edge in our trading, and that's really what we're after as traders.
All right, let's say I have some young trader out there right now trying to learn the ropes, and I'm like, hey, listen, old man, everything I do is golden. I've been buying for 6 weeks right now, and
how could you possibly lose?
I'm like, every trade I make, I'm making tons of money. Why do I need to pay attention to patterns and specific signals? And don't you just buy?
Sure. Well, again, if you go with the long-term buy, and depends on how long you want to hold strategy, over time, that probably does work, especially if you hold long term. But if you're really
I've been just buying option contracts. I've just been buying out of the money option contracts.
Because you're brand new and you just downloaded your Robinhood app, right? And so you're good. Hey, I've got a new idea. Let's go buy that stock.
This is what I've been trying to tell new traders. Like, listen, it's been good times lately, right? It's been really good times.
Well, I'll tell you what, definitely what separates the amateurs and the pros over time is the pros have a consistent rule-based game plan.
Yeah, and what I say, I'm like, do you want this good time? It's a great time right now. Do you want this good time to be 6 months from now, from a year from now, 18 months, 5 years? Do you want to have a consistent good time like this always? Learn basic patterns on a chart.
Yeah,
that's all.
It improves the process for sure.
It improves. It makes you have a good time no matter what. Because right now we're going through this euphoric bull market that's just crazy, right? Hey, good times, making money. We're all happy. But 6 months from now, we might have a less robust market. But we still want to make money, right? We still want to make money 6 months from now. And it's these type of patterns that Noah's talking about that really can give you that consistent edge over time. So, how many, does, like on something like Apple, do you think it helps, Noah, that like a pattern like Apple that has so many people watching it has an advantage on a breakout compared to random Joe Blow consumer staple company that hardly nobody knows about?
Or just buying on a whim for whatever reason without any consideration of timing. You can improve the process. And again, you're not going to get it right every time. You may be right 60% of the time. You might even be lucky and get to the point where you're good enough to be 65, 70% of the time. I don't know a lot of traders who are that accurate. I know a lot of traders, and they all kind of have the exact same, they may start out that way. They may start believing they can predict the future, that a pattern like this tells me, oh, it's going to go up guaranteed. No, there are no guarantees in the markets, but what there are just probabilities and odds. And in reality, technical trading and trading with the trend doesn't guarantee the outcome, but what it does do is it gives you increased probabilities of an outcome. And, the idea of people continuing to buy up, and there's a lot of euphoria out there, and it seems a little bit disconnected from reality. It's definitely a Fed fueled market where we're seeing, the buy, what do we call it? The Powell put, I don't know what you want to call it. We can call it anything you want. The market's been very, very euphoric, and all good things like that will eventually come to an end at some point in time, and the market will chop. It may correct, it may consolidate. It definitely goes through cycles and certain seasons and things of that nature. But at the moment, this is where I have to trade what I see on the charts and trade those patterns and trends. That's become more important to me, Mark, than the fundamental analysis, which also is important, especially in the long run. If you're going to buy companies and assets, you want to buy good ones. But right now, even with, terrible jobs numbers and big drop-offs in GDP, and obviously there's lots of negative things out there as well, the market has continued to go through this recovery just like gangbusters. Now, and people say, oh yeah, well, the market's a forward-looking instrument and all of those, fun and fancy things. But I think the real big difference between the amateur and the seasoned pro is the seasoned pros already learned the hard lessons, and they can be expensive lessons, and you don't want to lose money when you're trying to make money speculating in the markets. But that's what eventually the amateur who has no game plan, that's eventually what will happen to them without a variation over time. If they don't have a good financial education, they just go in and just buy because that's what's hot right now. Eventually they'll catch the stock that doesn't run up and runs down and it steals their money.
Yeah, no, and we want you to have a good time forever. So if you want to learn more about these classic trading patterns, this classic behavioral analysis, we have a ton of material at Tackle Trading. Email me at team@tackletrading or go to the website. We'll get you a trial. Now, for the rest of this show, I want to talk about some other interesting behavioral patterns that we've seen in the market over the last few weeks. Behavioral trade, I mean, the behavior behind trading is fascinating to me. And so I'm going to talk about 4 things tonight. The first one I want to talk about are about this propensity to run up into earnings that I've seen time and time and time again this quarter. Will you go to Netflix really quick?
You bet.
Now, when I first noticed it, it was on Netflix heading into earnings. Now, Netflix had some different breakout levels, and this is back in April. And now Netflix, popular, very well traded stock. And I remember at the time when it broke out, because it broke out of classic resistance levels, right? So it had nice horizontal resistance levels, broke out just like Noah had been talking about the first 10 minutes of the show, nice trading pattern. And I remember commenting to myself, and I didn't think anything of it at the time. I was like, wow, Netflix is really running into earnings. And what I meant by that is like, yes, it was breaking out. It was running up big. And if you could highlight that little time period into earnings, just so
like
people
right back in here.
Yeah, right. Yep. Yeah.
Oh.
I always ask you to do that, and you gotta go find your tool.
Go. I gotta. My 3-year-old ran off with my drawing pencil, so I'm doing this here with my mouse. I don't know where he went with it. I'm gonna find it.
Yeah, but yeah, those big candles right there, I mean, they were a much larger trading day than the previous candles. You had previous little bitty candles, your average price movement on Netflix. And then Netflix went on this 4-day monster run just the week before earnings. And I remember thinking to myself at the time, I was like, wow, Netflix is really running into earnings. I was like, didn't think much of it other than it was a nice breakout, nice play for whoever made it, right? Fast forward several weeks later, we have seen this gigantic run into some of the, I don't know what's the right word for it, the cool kids, right? Now, when somebody trades a REIT or a utility, those aren't the cool kids. Most stock traders couldn't name maybe more than one publicly traded utility company, right?
Other than the one they pay their bill to, which
yeah, like traded, right? That's what I was thinking in my head. So utilities aren't the cool kids, and there's so many stocks out there, but they're not those cool, sexy, hot names. And what I started to see this entire earnings season was this gigantic run up into earnings. Now, whenever I see something happen once, don't think much of it. When I see something happen twice, catches my attention. But when I start seeing things happen multiple times, I'm like, I wonder if there's something here. I wonder if there is some behavior going on impacting traders. I wonder if there's some unwritten collusion going on amongst traders.
Collusion. You can't use that word because then all of a sudden nobody takes you seriously anymore.
But it's this unwritten collusion because nobody's actually communicating with one another.
Organic collusion?
Yeah.
Call that.
you know, I mean, because isn't that what a breakout is? Is it's just nobody's communicating, but they're doing it.
Yeah. Yeah.
And we'll give some examples here, but like the most pronounced example over the last couple of days was Zoom Technologies. Once again, one of the sexy stocks, one of those stocks everybody's talking about, and earnings was last night. And once again, look at the normal trading range of Zoom. You got these little bitty candles, this average trading range, and this price action was really crazy compared to its historical standard. And then over the last couple of days, right heading into earnings, boom, this huge, gigantic explosion in price heading into earnings. Another stock, CrowdStrike, CRWD. Once again, one of these sexier names, once again, pretty good trading ranges over the last 6-7 weeks. And then once again, boom, explode into earnings. Massive candle, massive movement, huge, gigantic price run up. All right. Noah, tell me I'm crazy.
You're crazy. That was fun.
All right. So what could be going on from a behavioral standpoint?
Well, so let me kind of give you some perspective on how I would normally approach earnings. Normally earnings is an unknown, and more often than not, you know, looking back over I've been trading for a long time now, Mark. And when I first learned how to trade, they would tell us, "Oh, avoid earnings. Don't."
That's how I was classically trained as well.
Yeah, don't avoid earnings because it's an unknown, it's an uncertainty, and you don't have, unless you're Martha Stewart, you don't have the insider information. You just don't know. And so, which again, if you did have the insider information, that's illegal anyway. So if you're looking at that unknown, just because it's an unknown variable, a classically trained trader will be taught that, well, risk is correlated to control. And because earnings is an announcement that normally happens after the market's closed, and so there's this potential for a gap, it removes some of your potential to control your ability to get in or out of the stock at the price point you want. You know, it can gap up or gap down. Now, over the last quarter, even companies that had pretty ugly earnings outcomes didn't gap down. I have not been seeing things take negative, not a lot. I mean, a few here and there, but for the most part, even companies have had pretty ugly forecasts. And again, have suspended guidance because there's a lot of unknowns out there economically. Stock prices just didn't go down. So I think that's emboldened some of the traders, and particularly in these kind of, you know, new sexy, new kids on the block type stocks that are getting a lot of attention. The idea is like, well, earnings is coming. You know, these guys are tearing it up. And part of it is just because people see the stock price going up. People out there are buying ahead of an earnings announcement in anticipation that it's going to be a good news and, or at least not gap down. And so I'm one who will trade before earnings, but
that's fascinating. I didn't even think about that. So what you're saying is, all right, because I mean that's been another pattern we've seen this last couple months, is that Disney, for example, had terrible earnings, just abysmal by any standards. Stock didn't move on earnings. Can you even find, if you didn't have the little earnings little circle at the bottom, could you even find what the earnings day was?
No.
I mean, terrible earnings, historically just terrible. Stock barely budged. All right, so what you're telling me, and it makes a lot of sense, and I didn't even think about it like this, is that part of the psychology on some of this run up that's occurring is an absolute lack of fear in any shape or form. And that complete lack of fear is like, hey, earnings is coming. Let's just party because nothing bad can happen. And that, since that's been happening time and time again, I mean, go to WWE on earnings. WWE's earnings weren't great, you know, and they had a nice big gap up. Like, and I could give you hundreds and hundreds of other examples where earnings were bad or weren't great, and the stock either gapped up or just didn't do anything. And so if there's no fear, and I'm literally thinking about this the first time, if there's no fear, why wouldn't individuals run up into earnings?
It's a good question, and it's been interesting to watch it pan out. And again, now normally when I trade into earnings, there's actually a pattern I do like to trade into earnings, and that's on average the volatility rise. Where normally, prior to, we'll call it COVID-19 for, prior to that economic phenomenon that's really shaken the market up a bit. The second easiest thing to predict in the stock market, the first easiest thing to predict is the passage of time. I have yet to be wrong on that one, Mark. And this is why you like selling theta positive strategies, because
Love it.
You can cash flow on the passage of time. That's the one thing that's easy to predict. The next easiest thing to predict is that on average, around earnings, implied volatility goes up. So about 4 to 6 weeks prior to earnings, I would expect implied volatility to rise on the options and the premiums to go up in anticipation of earnings, because earnings is a catalyst that can make the stock price move. It can make it move up, and historically speaking, it can make it move down too. We haven't seen a lot of that this last quarter, which to me has been very, very surprising. And probably particularly surprising to a lot of the bears out there, that this market just has seemed, it's just almost impervious to negative news. So it's been interesting to watch that. And so seeing stocks ramp up prior to their earnings announcement, I think gives you a pretty good short-term viable strategy. Hey, catch that stock a week or two before earnings, try to catch the run up to earnings. Then you don't even have to be in the trade for earnings. You could have exited with a profit before they actually ever have their announcement, right?
Absolutely. No,
So,
and it was tough because that classic strategy we weren't able to do because volatility got jacked up so high because of COVID-19 situation. But that is something that we teach at Tackle Trading. It's a great strategy. It's such a, I don't want to use the term low risk because I hate that term, but it's such a low stress trade.
Well, it's having the wind at your back is probably the best when you trade with a trend and you understand the volatility cycle in general. It's having the wind at your back. It's like having, an ace up your sleeve type of thing. It doesn't guarantee you're going to win, but you've got a little extra edge because, normally that's what happens. And it does become, again, one part naturally occurring phenomenon, one part self-fulfilling prophecy. So with this recent, run up into earnings announcements, and I wouldn't say that that's not a phenomenon that didn't exist before, but not with the same kind of consistency that I'm seeing it right now. It's been a pretty universal phenomenon, and not all stocks have benefited, but you've got pretty good odds at this point in time. And so, we're kind of in between earnings seasons. You got some of the laggards and some of the early reporters. A lot of stocks out there, their earnings aren't out until July. And, we'll see when they do their next earnings announcement. But there's always somebody reporting somewhere, and then you get to the little quiet time between, those earnings announcements.
All right, let's say I buy in. Let's say I'm the only human being that buys into my malarkey of, hey, there's this run up, and well, it's unarguable on the sexy stock that it's occurred. The stats, the data is overwhelming. It has occurred. It has been a phenomena this earnings season so far. Stocks have been running up into earnings. Now, we don't know if that phenomenon is short-lived, and for all you know, right, the first time you do it, the stock will go down, right? That's Murphy's trading law.
Yeah.
Murphy's law of trading. You're like, oh, that's genius. And then of course, but let's marry two concepts. Let's marry the classical concepts you were talking about with the phenomena, the behavioral phenomena that we've seen on the run up to earnings. All right. So we pull up Zoom again. All right. So so Noah was talking about that phenomena of like breaking to new highs. All right. And I really think that whenever you get a harebrained scheme in trading, and I don't really mean a harebrained, but something unconventional, let's use that term, where, oh my goodness, there's this run up to earnings. There might be something about that. We don't want to start betting our money blindly just on a theory. But if we can marry it with something classic in trading, a breakout to new highs or a breakout out of a resistance level. So if we're like, I'm going to look for this, I'm going to look for run-ups to earnings, but I'm going to look for a technical signal to get in. So I'm going to use a classic, tried and true, been around for decades, will be around long after you've passed this mortal realm, breakout signal to new highs. How would that have played out here in Zoom? What would you have looked for if you had the theory that, hey, there could be a run up into earnings, but I want a classic technical signal to enter me into the trade?
Well, you had a couple choices here. One, you had to pull back down into that 20, 50 period moving average with the hammer candle. That could have been a classic buy signal for folks who could have caught in, or you could have caught it a day or two later with the breakout above that high of 177. And you could have caught some of that upward momentum a day or two before earnings. And then again, this is one of those where not knowing the outcome, a lot of traders will close out prior to earnings. And so I'm not surprised to see that red candle there right before they made their announcement after the market. And then boom, today's price action just resumed that upward trajectory. And just, to kind of proof that out, let's go look at our little implied volatility indicator. And we actually did see a run up in volatility right ahead of the announcement. So this, and for whatever reason, I'm getting partial data on that. But there was a big run up on implied volatility right prior to the earnings announcement. And then it does drop out afterwards. That's the really common pattern right there, is boom. So what might have happened is if you'd gone back and if you'd bought a call option, for example, back when it was trading down here around 170, 172, in that ballpark, you would have benefited from the rise in price. You would have also benefited from the increase in volatility, and you could have closed the trade out prior to earnings. If you carried through, you would have benefited from the increase in price, but you probably would have taken a little off the top for a drop in volatility. So you still would have won, but you might not have won as much with the way that volatility can get sucked out of an option after the earnings announcement is over. But this is a pretty good example of what I've seen on a handful of stocks out there. And, this is not what I would say is, again, classic technical analysis. Normally I'd say, I don't want to enter a trade a week or two before earnings. That would be my normal MO, unless it was specifically a volatility strategy. But I've been seeing the pattern more and more. And so, whether or not that persists through the next quarter, the next earnings, that'll be hard to say.
Now, so let's say on that pullback, because that was a really nice pullback down to a rising moving average, nice hammer candle. What is a hammer candle, by the way, Noah, in case someone doesn't know what that is?
Well, anybody who ever played Donkey Kong, I just really dated myself there. That's a hammer candle right there. It looks like a hammer. It looks like a mallet. It's got a long lower shadow, just like the handle, and it's got a top that looks like a hammer or a mallet. That's why they call it a hammer. So, and it's in the context of a bottom usually where the prices come down. And what the shadow there tells you is the prices went down near that 50 period moving average, and then they turned, and by the end of the session, it came up and closed higher than it opened. And so you get a nice little green hammer candle. And you can go back and you can find that pattern on bottoms. And I'm just using Zoom here as an example. And let's see if we can find another example of a hammer candle on the bottom. We may not find one right here on this stock, but let's see what we can find. Inverted hammer. I don't see a textbook hammer right here on this chart. That's a classic hammer right there. That's the one we're talking about. When you see that same type of pattern on the top, they call that a hangman. That's a possible warning of a reversal. There's a hammer right there. Little hammer, long shadow, prices ran up afterwards. Hammer light candle on a bottom where it shoots up. But a very, very common pattern for a bottom. And again, it's coupled with that 20 period moving average and an old support resistance zone right there at 160. So 160, known resistance, 200 period moving average. Prices test down below it, but when it closes back up, that's a strong signal. Traders love to buy off those dips. They do. And some traders would feel more confident buying it on the breakout, which is kind of weird to think about because that's going to cost more if you'd bought it on the dip versus if you waited to pay for the breakout. But that breakout, people like that because it's got a good probability of running.
All right. So now one of the reasons, because once again, I've been trained this way as well, is that you usually avoid entering new trades 10 days before earnings. Why have we been indoctrinated with that to the core of our souls?
Well, for a couple reasons. It depends on what kind of trader you are. If you are an options trader, that week or two before earnings, you're already going to be paying a fat premium. On average, the volatility's already run up, and it may run up a little bit more, but you'll be paying top dollar for the options just because earnings can make price move, and therefore the premiums get inflated a little bit, just out of anticipation that the price can move. And it's both calls and put options will get inflated. Now, I think the other thing is just that it's an unknown, because it's that unknown. And normally a swing trade takes about 2 weeks to go, an average swing takes 2 weeks. So the idea of if there's an earnings announcement anywhere within the next 2 weeks, that would interrupt the normal flow of a swing trade. And it gives you that outcome unknown. And so the way I've looked at it, Mark, is it's kind of business as usual. No earnings, nothing to worry about. No information can come out, or on average, no information will alter the outcome of the trade. And you're just trading the trend and the technicals. You throw an earnings announcement in the mix, well, that could alter the outcome. And so that could interrupt the trade. And if you're looking for a textbook swing trade that averages around 2 weeks in time, well, that means don't buy stuff with earnings in the next 2 weeks.
So basically the downside of what I'm hearing is that you got a much shorter window to be right.
Right.
And so I guess that comes down to personality, right? It's like if you're willing to have a very short window with a potential explosive move, but not much time, it's not day trading per se, right? But it is hyper short swing term trading with a really small window. Comes down to, I guess, personality. So we have a DocuSign with earnings, I think tomorrow. Pull up Docu, another one of these sexy stocks.
That's a good example of the pattern we're seeing.
So explain how an individual, because once again, hot stock, earnings tomorrow, I believe. I don't know if it's before the bell or after the bell, but you had this really nice run up in the previous week. How are some ways somebody could have played this? And I think there's a hammer candle there too.
There is. That's kind of, you've got almost more of a doji, and the difference is between that long-legged doji right there. That's that same long shadow. That's definitely got the same pattern type. Not in a textbook you'd see different names on those candlesticks, but the concept's the same. Long shadow shoots back up. What's surprising on this chart that really leapt out at me right there, Mark, that I found atypical and that really lends itself to what we're talking about, is that increase in volume.
Massive
increase in volume, where normally when you see stocks breaking to new highs, unless it's news driven, meaning that there was already news that came out that has instigated buying, you're seeing a whole lot of demand, and there are people selling in there. I mean, make no mistake, there's, for everybody buying, there's somebody who's offloading shares, but they're driving the prices higher, and you see a big influx of volume, twice the daily average, heading into earnings announcement like that, where boom, prices are shooting up and you have a huge influx of volume. And then here earnings is coming out on the 4th aftermarket, and you see the volume already starting to die down a little bit. That's
because when you've made a ton of money in a very short amount of time, right? But
why carry through earnings if you've already made the money?
When you've already made the money, right?
That's like letting it ride after you've won a few rolls of the dice in Vegas. It's like you think you got the hot hand, let's let it ride. And there would be traders who would be willing to carry that through earnings. I would say at a minimum, you should take half off the table. If you made a profit, lock in some of it, let some of it ride if you want, but don't let all of it ride. Make sure you lock in some gains.
It's not common to have this type of volume increase like this level before earnings.
No, normally it's wait and see. Normally it's
wait and see.
Wait and see. And occasionally I'll see more an increase in selling prior to earnings because of the unknown. Like people want to get out before earnings. And so I used to identify a pattern, and it's probably less so now than it was a few years back, but I would notice a stock price have a red day before earnings. And it wasn't ever a huge red day. It was just a red day. Prices went down. because people unloaded prior to earnings.
I mean, and I mean, there is mounting evidence that this is occurring. Now, once again, the whole phenomenon 3 months from now might be dead, right? You know, but this could be applied when the market has no fear. There's lots of ways to make money when the market has no fear, right? Do anything, and you're probably going to make money. But it's about maximizing. And some of the runs you've seen in the Zoom, in the CrowdStrike, in the DocuSign, these have been pretty massive runs. It's not the same pattern, but pull up Chuys, CHWY, I believe.
Oh yes, I get their boxes delivered to my house.
Yeah, I got a Chuys box in my garage right now. Earnings early next week, I believe.
That's the exact same phenomenon right there. You didn't see as much of a spike in volume. That volume was more average, more typical. But today, you did see that, or I guess that was yesterday. You saw a big spike up, and then when did they announce? They're also on the 9th, so a couple more days prior to earnings. But that's another good look at that. So again, breakout, boom. There's a red hammer candle right there, long shadow.
Nice bounce off of, I think that's the 50-day moving average.
That is a 50. Yes, it is.
You know, and so it's like, it's one of those things. Is like, this isn't the only thing I'm going to do moving forward, right? But it's something that's caught my attention. And if I can get a technical pattern, once again, because I'm never going to bet blind. I'm never going to say, I think Facebook's great, let me go buy some Facebook shares. I mean, no, we've learned too much to be that ignorant. But when we get a signal on Facebook or on Chuys or on CrowdStrike or DocuSign or Zoom, I really think that there's something to be had with this recent phenomenon. Now, right? Murphy's Law of Trading, the next time you do it will be the first time it goes wrong type thing, right? I get it. But
that's why you would always use appropriate position sizing and stop loss, right? Like even though this may not be a part of your regular system, you can still incorporate the core rules from your system before you go do anything. I think it'd be foolish to go in and just trade something new, like try to win big, when you have a system, when it comes down to good risk management, good money management, having an exit strategy before you ever get in the trade. You can try any new trade as long as you follow good risk management, position sizing, and money management.
No, I mean, and the last one on this, and then we'll move on to a new subject real quick. Use a classic technical signal in conjunction, right? Like use one of those classic pullback, classic breakouts. Don't just do it blind. Have proper position size, and realize that you got a short window, right? Like, and if you hold it through earnings, I'll always say you're gambling because you don't know what the results of earnings are going to be. You don't know what the results of earnings are going to be. All right, I want to talk about a new phenomenon, once again, with a market with no fear. I don't know if Thinkorswim has it yet. WMB? No, that's not. No, that's not. WMG.
WMG, Warner Music Group.
All right, so okay, IPOs. Now, I was off playing poker in the days of the .com bubble, right? But one of the things I remember hearing the stories about is how an IPO would come out and it would just go to the moon. Like, I mean, it was like anything. I mean, anything could come out with an IPO and and it would double in price in the next, very short amount of time. I mean, am I exaggerating? Am I using hyperbole, or was
no? You go back, and for a while, that's all that it ever did is it would shoot up. And then there was a period of time where they overvalued IPOs, and it was a common thing because they would tend to shoot up so much. It became a really common practice for them to inflate the value of the IPO a bit, and it would open at a higher price. And I would see those sell off. But the more common pattern I've been seeing lately is the company IPOs prices shoot up for the first month or so, maybe a couple weeks, and then you'll see a sell-off and a correction. But that's a pattern that, again, you have to sit and study a lot of IPOs to figure those types of patterns out. And I think we're definitely back into the IPO prices run up initially. They may not continue to rise, but you look at like your DraftKings recently. That's a good example.
Yeah, pull up DKNG. It's a stock we talk a lot about.
There's an IPO that shot straight up.
And it makes sense. Like if there's no fear in a market, right? Like understanding the dot-com bubble, having never, I mean, this feels very dot-com bubble-esque. I'm not saying things are valued. I'm not making that statement, but it's just the euphoria, the lack of fear, the you know, the just the behavior attitude that nothing can go wrong, you know? And it's like pound, 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 pound. I mean, and you saw that with DraftKings. I was very curious on Warner Music Group, what it would do today. And what did it do? It went straight up from the bell.
From 27 to 30 at the high, 26
You know, I mean,
to 30. Wow.
it just went straight up from the bell, you know, and it's just really, really interesting. The psychology of trading that happens during some time. Man, it seems like a million years ago where the whole world was coming to an end, Noah. And you know, people were panicking in their portfolios and wondering if this was 2008, 2009. I mean, that was just freaking March and February. I mean, it seems, I mean, like
no doubt. Well, I mean, the madness of crowds is really something special to behold. I mean, well, I mean, you could really take what we witnessed with the pandemic and the response to the pandemic. There was a lot of irrational behavior. And, you know, you could say, okay, well, just a week ago, people were afraid to go outside and open up businesses again. But everything's, you know, excuse me. I was going to say emotional sentiment has changed. And now you've got a whole lot of people out in the streets. Like, it's just weird to me just how mob psychology works. And if I were to talk about market psychology on average, Mark, I do believe it is mass mob psychology. And it goes through cycles where, you know, back in March, everybody's afraid, everything panicked, everything sold. Did it sell too much? Maybe, maybe not. But when the feds came in and provided such a robust backstop, and, you know, you might call it stimulus, I might call it life support. I don't know if we would agree on what the feds have done, but how much money did they pump in so far?
no,
Trillions?
a lot.
I mean, a lot, trillions and trillions of dollars. And they're probably not done yet. And just on the halftime report today, what were we talking about? Negative interest rates and mass infrastructure build as a way to, you know, keep the economy running. And when you look at just the behavioral patterns of people, they are individually, people are not predictable, but in mob settings, they are predictable.
I think that is some wise stuff. You know, all right. So explain to me, and because the Fed announced that they were buying corporate bonds. What was it, 6-7 weeks ago? It's been a while.
Yeah.
You know, the market just didn't go up thousands of points. I mean, there was some hesitancy at start. You know, so they make their announcement. It definitely put a bottom in the market, but things did. I mean, the last few weeks has been different than those first few weeks after the Fed did that. Explain how, once the ball gets rolling, what's happened.
Well, I mean, the initial response is when you get like your initial news of bailouts. You see the market put almost a V-shaped recovery here, where you saw a very sharp rise. And the first couple of weeks of that recovery news, the price action was rapid. These are big moves, you know, big, you know, several 100-point moves back up to the upside here on the S&P. And then you'll notice it calmed down. Prices started to oscillate sideways more. It wasn't, you know, continuing to press for new highs. It almost stalled out there at 3,000. I wasn't sure it was going to break, Mark.
No,
I was
either.
very skeptical, and I was ready to get my bear on. Like, you know, I have to have some like bear slippers, something to wear around the house, because it's the only bearish action I'm getting right now. Because that I expected at 3,000. I was like, this is going to hold. This may drop. So I bought some insurance on the portfolio, anticipated the drop, and then here we are, you know, a week and a half later, and boom, I think 3,200. It's going to hit 3,200 before it comes back down to 3,000 is my guess.
Well, yeah, I mean,
So,
the last 8 trading sessions have felt particularly like it felt different than this entire run. It's like it does not matter. Riots in the street, conflict with China, vaccines, you know, WHO comes out and says vaccines, we don't have anything that's even close to working, and it doesn't matter. I mean, it feels like the mob has truly taken control of this market. And when there's a moving train, do you want to stand in front of it? I mean, And it's just finding a way to play it, right?
Yeah, like no doubt. I mean, I made the comment, and I don't know if this is a good comment or not, but the feds have been looting the bears trading accounts. That's for sure.
It's tough being a bear.
Oh, the bear there. I don't know if there's many bears left. I think that their bearishness has been beaten out of them by this market rise.
I think because there is a large segment of really smart individuals, and I'm talking about some of the most respected individuals that I listen to, who have these really, really good, cautious, be careful, just wonderfully articulated, thought through arguments. Some of the smartest people, in fact, all of the smartest people I know are very cautious to bearish. When you got millions of people in a mob running down the street and there's like 6 smart people standing there telling them why they shouldn't be running, they're never going to win that fight, are they?
I don't think they will.
They're not. I mean, so one day, I mean, it's one of these things. Like, I think bears have been beaten so bad over the last few weeks that I think bears have been like, all right, I'll short again one day. I'll wait for the market to hit 35, 3,700. I'll wait for a catalyst. They've just been beaten soundly. And I really think understanding the behavior and the psychology of what's going on, I know it gives me more confidence in my trading. Now, let's say I don't have to know any of that though, right? To be a successful trader.
No, I mean, you don't need to be a successful trader. I think you really need just a handful of small ingredients. And it's kind of what we talk and teach in our step system, where you need to know how to identify a trend. You need to know how to identify an entry opportunity. You need to know how and where to place a stop loss and how to appropriately position size so that you can, because there's an old saying on Wall Street, there's old traders and there's bold traders, but there's no old, bold traders. And, on average, if you use good money management and a stop loss, your winners more than compensate for the losers you have. Because you catch a trend, you catch a run, you let the prices run when you're winning, but you always stop it if it runs against you. I think that's what you need more than anything, is just a good systematic approach. Then as you add in more and more knowledge, you can get better at it. But you don't need to have, if you talked to me 15, 20 years ago when I first started trading and tried to explain to me all the things I'd end up studying just to improve my knowledge on the market. I mean, I've gone down not just, technical and fundamental rabbit holes, but I've gone down behavioral, like we're talking about now, behavioral psychology, economics, behavioral economics, trying to understand the finer points of mob psychology and just really what you can read in that chart. And that's what I've always considered technical analysis more than anything, Mark, is just a study of behavior. You're studying the price points at which people are buying and selling.
No, and I know some individuals are like, I've missed out on this great run. There will never be another run. I mean, this is the one thing you learn as a trader, is that there are a million trades ahead of you. Like in the next year, in the next 5 years, the next 10, and the rest of your life. Like Boeing today. Boeing had a great trade, right? The sentiment was building in these distressed industries. You had a little bit of short-term resistance and huge breakout. Some people caught it, some people didn't. Guess what? There's going to be another setup. There's going to be another trade. There's going to be other Boeing type trades that you can make. Do not get caught up. If you get caught up on all the trades you miss, I don't like your chances of succeeding in trading.
And FOMO is an account killer. Write that one down. FOMO is an account killer. Fear of missing out and chasing something after the fact, like I don't want to miss out. In fact, I saw this just today I was perusing Facebook, and let's see if I can spot it here if I've got it. And you tell me about the psychology on this. This is a penny stock a week ago. What do you think that those? This was a group of novice traders on the Facebook talking about this random genius brands, which I'm not familiar with at all. But a month ago it was worth 31 cents, and today it hit a high of $8.
Yep.
Okay, what's the novice trader who's never experienced anything like that before going to do?
They're going to go look at every penny stock they can, or they're going to go buy at the high.
They're going to buy this one, or they're going to try and repeat the process. And that's exactly every comment in the commentary that I saw was, what's the next penny stock that's going to do this? Well, that's like trying to predict where lightning's going to strike. Are you serious? Like, are you really going to try to predict which penny stock goes and I don't even know how you say 800% increase. I don't even know how you say that.
Mm-hmm.
Quadrupled. No, I mean, this thing shot through the roof, and this is where FOMO is going to drive FOMO is going to drive that up even higher. But there's a high probability that thing just comes right back down. In fact, I've made that trade. One of my very first trades was just like this, where I was brand new. I was green. I saw a crazy run up in the stock price. Rumor was that the company landed a big government contract, and the very next day, that $8 stock shot right back down to 50 cents. And I lost a lot of money very quickly. And it was a pretty humbling experience because it occurred to me that I didn't know what it was doing. That was one of the things that led me to go get education in the first place, was fear of missing out and chasing after something like that. Well, okay, what's going to be easier to do? Find the next stock that does that, or to go pick off something like an Apple that's got a breakout setup?
No, I mean, there are literally thousands of penny stocks. I mean, I'm not even joking. Like thousands and thousands of penny stocks. And I know individuals who this is what they do. They're penny stock traders, and they make it their focus. They make it their passion. And if you want to go down that route, God bless you, right? God bless you. There's usually some time and effort to research and find and study. But hey, whatever's your passion's your passion, right? The one thing I do know is that Genius Brands comes and goes, right? I know that there are tens, if not hundreds of thousands of eyes on Apple every day. And so I know that, listen, I only have 16 waking hours, sometimes 17, sometimes 15 every day. I got kids, I got a life, I got cats to take care of, I got TV to watch, I got dinner to cook. I only have so much time, and I put a lot of time. I probably put 9-10 hours into trading a day, but I only have so much time. And I know that as far as time efficiency, Zoom, Apple, Netflix, Facebook, Boeing, I got lots of friends out there that I'll never meet that we're looking at the same patterns. And when something triggers, I can hop on board with my friends and we can go on a nice ride. Sometimes we'll win, sometimes we lose. And if we do proper money management, we're going to have a good time for decades and decades to come. So if you want to be penny stock and follow the trends, because I've seen some other things like one of the funny things I've seen, once again, of these behavioral trends, I've seen a lot more activity in low price stocks. Go to LK, Luckin Coffee. I've seen Luckin Coffee, like I saw huge volumes and purchases when it was down at a buck $1.50, trying to catch that next big thing, right? If you want this to be your passion, go for it. I just don't have enough time in the day. I just don't have enough of time.
No, one of the things that you mentioned a moment ago that I kind of struck me is, when we do our scouting report meeting every Friday, and we all bring our scouting picks and our trade picks, how often are the ones that end up making the list the ones that everybody individually brought to the table? I would dare say probably 50-60% of the stuff we put out there is not something that I found, or you found, or Frank found, or Matt found, or Tim. It's like Tim had it, Frank had it, you had it, and I thought about it, and everybody, somebody brought it to the table, and we all had the same technical setup, the technical, pattern there that makes it attractive to a trader.
Yeah, no, I love trading. I really do. I feel so blessed. Work. I know a lot of tackle trading individuals are this. Hey, once again, run up into earnings, right? Run up into earnings on old work.
Well, and I picked this one because this is one of my watch list candidates that panned out really, really well. And I knew earnings was coming. But weeks in advance, I was watching for that breakout above 30. When it finally got the breakout above 30, boom, it took off. And here it is. That's a run up with high volume right before earnings. That's another one that's coming up. And they report tomorrow, don't they?
I'm not exactly sure.
On the 9th. They're soon,
next week.
this week. Yep.
Next week. All right. Well, I mean, trading's amazing. It really is. Like, one of the things I love, and maybe some people watching tonight, there have been so many people that have been trading for the first time ever over the last few months. Trading is going through this little mini explosion out there, and welcome to a club that, Noah, you've been almost 20, I've been 15 years. I mean, trading's amazing. It is, whether you make it a profession, a hobby, a way to make a few side bucks, whatever it is, trading is awesome. It adds something to your day. There can be ups, there can be downs, right? Just get good at it. Become disciplined. And I mean, we want all of you new people to be around for decades. Even if you're not with us in our community at Tackle Trading, we want you success, because trading is one of these things that your success doesn't take away from my success. In fact, oftentimes we can have success together. We could have all bought work. We could have been all bought work and enjoyed a nice ride on the way up. Your success doesn't come at my success. And that's the thing I like the most about trading. And if you want to learn some of the techniques that we've been talking about tonight, if you want to be part of a great community, go to the store tab at tackletrading.com, sign up for a 15-day trial, or you can email me at team@tackletrading and I'll help you. No, always a pleasure. I like the rhythm that we always have when we teach together. I like that. The biggest takeaway I had is I really do think that one of the things that's propelled this run up to earnings mentality is the absolute lack of fear that people have had to earnings. I mean, that makes so much sense to me. Like, if you always put your hand on the stove and you never get burnt, well, you're not afraid to put your hand on the stove.
That's true. So
I think there's a lot of wisdom there.
Well, and if you learn a system, you learn good money management, it can prevent the type of learning experiences that also come with a little bit of psychological damage. If you get taken out behind the woodshed by the stock market and you take big losses, those are hard for people. Some traders never make it back. And, I've been there. I've done that. I've done some pretty stupid stuff, Mark.
If you've been trading for a long time, you've had a big loss.
You've had a big loss. And it's
usually was something dumb you did.
Or impulsive or just stubbornness. Like, you believed you were right, but the market had a different opinion. And this is kind of like the case of the Bears. I mean, the Bears, they've probably all been beaten out of the market by now, but they have every reason in the world to doubt the market run up, because there's lots of negative stuff out there to look at.
Hey, Bears might be right 9 months from now, right? I don't know the future, but I know tonight they're not looking at charts. They're watching Netflix.
Yeah.
So,
Pajama Traders Unite.
All right. No, well, I know you have a class coming up here. Yep. Tackle 25 for pro members that are watching this. Tackle 25, 30 minutes. You can get to the events calendar, and you're going to be going over what tonight, Noah?
Well, we're going to be looking over the cash flow strategies. I mean, right now, probably the number one question I'm betting we get is, how do you roll covered calls up? That's probably a common theme out there among cash flow traders. We'll talk about that. I usually, when I run one of those shows, I'll have a minor agenda in mind, and then I'll let us go with the flow and really kind of find out what our pro users want to know. So I'm kind of a pro, I'm user driven topic. I'll take whatever topic they want. We'll talk about it, but I'd like to talk about rolling calls up. So, and we'll be there in 30 minutes or so. So I'd like to have you all there.
All right. Well, everyone have a wonderful night. If you're watching on this recording, whatever day it is, God bless. Give us a try at Tackle Trading. We got a great community, and we love to trade. We love to trade. Have a wonderful evening, morning, afternoon, no matter where you are in the world. Take care.